All right, welcome to the Explainer. Today, we're tackling a really huge idea. What if we could build a financial system so transparent that things like tax fraud just couldn't happen? We're going to dive into a research paper that lays out a blueprint for just that, using tech like AI and blockchain to create one single unified economic ledger for, well, pretty much the whole world.
I know, it sounds like something straight out of a sci-fi movie, right? But what's so wild is that this research paper says, hey, this isn't science fiction. They argue it's totally possible, and they even lay out a practical model for how to do it. It's all about completely rethinking how we handle money and data from the ground up. Okay, so before we jump into that futuristic solution, we really have to get a handle on the problems we're dealing with right now. And the truth is, our current global financial system, it's kind of a mess. It's this tangled web of disconnected systems that are clunky, inefficient, and honestly, super vulnerable. It just leaves the door wide open for both simple mistakes and, major exploitation. Yeah, the paper we're looking at lays out a whole laundry list of challenges. And it's not just the big headline-grabbing stuff like tax evasion or money laundering. We're also talking about the everyday headaches that businesses face. Costly human errors, those never-ending reconciliations that take forever, and trying to analyze data from different places that just won't line up. The key point the paper makes is that these aren't a bunch of separate problems. Nope. They're all symptoms of one single core issue. The whole system is just completely fragmented. So, what's the fix? Well, the solution this paper proposes is big. It's just as massive as the problem itself. We're not talking about just another app or some slightly better software. No. The idea here is to link all of our existing financial tech into one single unified cloud platform. Just try to picture this for a second. One secure system managed globally where every single financial event, everything, from you buying a cup of coffee to a massive corporate merger, is recorded instantly. And not just recorded, but recorded transparently and permanently. That, in a nutshell, is the core idea. So the big question is, how on earth would a system like this actually work? What's really fascinating is that it doesn't rely on inventing some crazy new technology we've never heard of. Instead, the whole thing is about cleverly combining four powerful tools that we already have today. Let's break down what's in this future tech toolkit. Okay, first up, the foundation of this whole system is blockchain. Now, the easiest way to think about it is like a shared digital record book. It's a ledger that's secured with some really strong cryptography. So when a transaction happens, it gets written down as a new entry. That entry is then digitally changed to the one before it. The magic here is that you can't go back and change or delete an entry without breaking that entire chain. This creates a permanent, unchangeable record, a single source of truth that everyone involved can actually trust. And this is where things get really revolutionary. This system moves us from the double entry accounting we've used for centuries to something called triple entry accounting. So the buyer and seller still have their own private records, the debits and credits, but, and this is the key, a third entry is created on that shared blockchain. It's kind of like having a digital notary that instantly seals the deal with a cryptographic receipt that both sides have already agreed on. Suddenly, there's just no room for arguments down the line. So if blockchain is the system's permanent, unchangeable memory, then you can think of artificial intelligence as its brain. The second a transaction gets logged on that blockchain, the AI kicks in. It instantly analyzes it and classifies it based on all those complicated tax codes and accounting rules. And this all happens in like milliseconds. It pretty much gets rid of the human error that costs companies billions and billions of dollars every year. All right, next up in our toolkit is the Systems Universal Translator. It's called XBRL. That stands for Extensible Business Reporting Language. You see, right now, trying to compare financial statements from companies in different countries is a total nightmare. Everyone uses different formats, different standards, it's a mess. Well, XBRL fixes that. It's basically a universal tagging system for financial info. So an investor or a regulator could instantly compare the revenue of a company in Japan with one in Germany and get a true apples-to-apples comparison. It's a game changer. And the last piece of this puzzle is where it all begins, the standardized e-invoice. In this new world, every single transaction, doesn't matter if it's big or small, starts its life as a digital document in one single universal format. Think of it like the very first domino that gets tipped over, setting this whole automated, super transparent cycle into motion. Okay, so we've got the four key pieces of tech. Now, let's put it all together. Let's actually walk through the journey of one single transaction to see how this whole integrated system works in practice. So it all starts super simple. Let's say a coffee shop needs to bill a client for a huge order of beans. They just generate a standardized e-invoice right there on the central platform. And just like that, you can forget about paper invoices or weird PDF formats that someone has to type in by hand. It's just one universal digital document.
Now, here's a crucial step. Before anything else can happen, the buyer has to digitally approve that invoice. The second they click approve, boom, that third cryptographic entry is created and the transaction is officially locked into the shared, permanent blockchain ledger. Forever.
And right away, the system's AI brain springs into action. It reads that e-invoice, and based on all the tax laws and accounting rules that are already programmed in, it automatically classifies the transaction. Is this a 100% tax-deductible expense? Is it only 50%? The AI already knows the answer, and it records it correctly. Every single time.
And here's the magic. That perfectly classified data doesn't just get dumped into some database. No, it flows seamlessly and automatically right into the company's financial statements, which, remember, are already in that universal XBRL format. What does that mean? It means no more of that frantic end-of-quarter scramble to close the books. A regulator, an auditor, an investor, they could get a real-time, totally accurate snapshot of the company's financial health at any given moment.
Okay, so this whole system sounds incredibly efficient, right? But I'm sure you're thinking, so what? What's the bottom line here? What's the actual real-world economic payoff for putting a system this huge and transformative into place?
Well, the researchers who proposed this didn't just stop at the concept. They actually ran the numbers to try and figure out the potential impact. They took data from a bunch of EU countries and looked at the relationship between economic growth and two really important things. First, the size of the shadow economy, all the undeclared off-the-books financial activity, and second, the level of income inequality. And the result they found is, well, it's pretty staggering. Their model predicts that by cranking up transparency, shrinking that shadow economy, and making tax collection way fairer, you could see a potential boost to the average annual GDP growth of over 0.5%. Now, 0.5% might not sound like a lot, but to put that into perspective, for a massive multi-trillion-dollar economy, we're talking about billions of dollars in new economic activity every single year. So let's just pull back for a second and recap the big picture here. The idea is that by integrating technologies we already have, things like blockchain and AI, we could create a system that could all but eliminate financial fraud, create perfectly transparent financial records for everyone, and give a serious, massive boost to the entire global economy. But all of this incredible efficiency and transparency leads to one final, really deep question. And it's one the paper itself brings up. A system that can see every single transaction could create a level of security and fairness we've never seen before. But what does that do to our privacy? The paper even calls it the dark side of big data. And it leaves us with this ultimate question to chew on. Is a world that's totally free of financial fraud worth giving up all of our financial privacy? And that right there might be the biggest challenge of all.